For more on what is next for Japanese investors, and Japan investors, I should say, let's bring in Yoshiko Yamaguchi, founder of Soya Japan Research and Consulting. Yoshiko, great to have you with us. What do you think the tariff uncertainty will do to Japan?
First of all, thank you for having me here. It's so honored to be here. Well, you mentioned about complicated relationship. Actually, the Japan-U.S. interests are aligned right now. So it's probably simpler than you think. In terms of the implication for the snap election, it's going to be enormous. So the decisive win of the Sanai Takaichi paved way for her to reshape the Japanese economic and then social structure, which could conflict with the existing structure. Stakeholder is like elderly people, large cap company, and also the bureaucrat elite. But she probably could do it was the massive win. For economic point, she already talked about 17th growth sector. And then some people talking about 17th focus is too many, but you have to think about it this way. She wants to bring back some key area back to Japan, and such as strategic security, defense area, and make it made in Japan possible in the future. Secondly, she wants to make sure people improve their affordability. Affordability is a very big issue in Japan, and that's key her focus. She's still trying to suspend 2 years consumption tax on the food, and following that, she wants to introduce a new tax refundable credit system. So that probably could change their consumer confidence before affordability.
I'm glad you're here. This is interesting. So we've been talking about the Japanese bond market is seeing historic volatility. I mean, the moves in a daily basis, 10, 15 basis points. On the flip side, the currency has been weakening. 154, sort of no man's land. But as we approach 160, something's got to give. Like, in my opinion, you can't have Japanese yields continue to go higher and a currency to continue to weaken. Where is the line in the sand in dollar yen, in your opinion? 160 seems to be it.
Great point. That's actually addressed by the U.S. government back in January, the end of January. If you remember, January 29th, U.S. Treasury coming in, we can't take the volatility. And then Takaichi government, they understood. So going forward, I think we passed the high volatile frame already. Going forward, probably the bond and the forex probably staying less volatile going forward. But that said, Takaichi government doesn't want to have a high yield. And I have an opportunity to listen to the BOJ official last week, and they mentioned about current situation is something like you driving unfamiliar place without accurate GPS. So normalization in new normal. So they don't want to drive too fast. So it could be a little bit dovish normalization. So currently, market expect rate hike in April, June horizon, but it might be happening. That could probably bring a little more volatility that timeline, but long term, intermediate time, I think we passed the highest volatility part.
So given all these catalysts, where do you see, how much more upside does the Nikkei have, and which sectors could see the most benefit from a lot of these reforms?
The ones who can bypass the pressure from China and the economic, trade tariff situation with U.S. So any industry coming back to Japan or security, defense industry standpoint, such as like heavy industry or shipping industry, could be the beneficiary. But we definitely seen the reshuffle from previous year. We've seen like big winners in AI data center years or large exporting companies. But probably picture will be a little bit different, and then different from sector to sector.